Good morning, everyone, and welcome to this session where we're going to be discussing the Omni CBR. My name is Charene Nortier, and I'm from the Conduct of Business Supervision Division at the FSCA. I'm joined by a number of colleagues from the investment provider side, as well as other colleagues from interested departments within COB Supervision. I'm going to hand over to Chwayita and Mtebele just now to do the welcoming, but just before she welcomes you and positions today's session, just a couple of house rules. You are most welcome to participate in any way that you want to. We have two ways that are available to you. The one is that you can raise your hand, and we will then give you an opportunity to activate your microphone and to speak and raise your question. Alternatively, you can use the chat function and you can type your questions, and we will do our best between the two options to give everyone a chance to participate. We really would welcome your participation because your participation is going to keep this an interactive and useful session. We've been joined by Chwayita. Chwayita, thank you so much for joining us this morning. And can I hand over to you to just introduce the session, and then we will get back to the business. Thank you.
Thank you, Charene. I feel like you've said everything I wanted to say. Good morning to everyone who has joined the CIS session. I am Chwayita Mtebele, and I am the head of department from investment providers. And investment providers consist of CISs in securities and hedge funds, and also the asset management leg. However, today's session is more focused on the CISs. As Charene has indicated, that today's session is really for us to engage with you and to get your insights and inputs on the document that was published. And please do feel free to participate, engage us, and give us constructive feedback, because we will not be able to go further on this journey without your involvement, without your critical inputs, and without your participation in today's session. So please feel free to engage, as this session is intended mostly for you to engage us on your inputs on what you have seen on the document that was published. As you would know, that this is quite critical for us to also achieve our strategic objectives, because as part of our off-site monitoring tool, the conduct of business reporting is not just only focusing on CISs, but it's also a cross-cutting tool that we will use for other sectors in order for us to be able to monitor off-site and also to have insights on some of the key conduct indicators that arise across financial institutions. So it's quite important that we get to understand what your thoughts are on this tool that we intend to use going forward, and we get your inputs as much as possible. Without going any further, as you might also know from our strategy, that we are embedding a data-driven regulatory approach and supervision, and this tool will really assist us to be more proactive and preemptive as a regulator, and also in promoting good conduct outcomes for consumers. So we are quite excited about this journey, and that we have eventually got here. And we are really looking forward to today's session and engaging with you. So please feel free, and once again, welcome, and we look forward to your inputs. Thank you, Charene.
Thank you so much, Chwayita. We would like people to really just jump in and start making comments or raising your hand because you have a question. We hope that you've all engaged with the Omni CBR, that you've all had a chance to play around with it a little bit. You've received the links, and I hope that you've also had a chance to watch the webinars. We recorded 3 webinars, and they are hosted on our YouTube channel. So the first webinar, we talked about the background of the Omni CBR, where it came from, and also what the legislative framework for the Omni CBR is. In that webinar, we also unpacked the timelines, because this is not an event, it is a journey. It is going to take us about 4 years to get from where we are right now to full implementation. And in the timeline, we've also unpacked all of the different steps. So this year's the consultation on the document. Next year, we're planning to test it with a pilot group across the various industries. And then the year thereafter, we will start with a gradual implementation. And I'm going to ask our colleague Juanita to just touch on that a little bit in more detail just now. But the second webinar that we recorded, we unpacked those sheets that applies to all institutions, regardless of which license you have. Because what makes the Omni CBR quite unique is the fact that it is a conduct of business return that spans across various parts of the industry. It is not just aimed at one industry only. And then in our third webinar that we recorded, we looked at those sheets that are specific only to certain parts of the industry. So you would only complete a specific sheet if you are, for instance, a CIS or a CIS in a hedge fund. And there are other sheets that applies to an insurance company that you would not complete if you are not also an insurance company. So we've got the 3 webinars that are available on the FSCA YouTube channel. If you haven't watched it yet, can I invite you to please go and watch it? Because that will help you a lot with framing your responses to the draft Omni CBR that we published. You can also find the comment section on the website. If you go to the website, you would be able to respond in writing electronically, and we will then be looking for your feedback and your participation. The comments are open until the 10th of August. So if you haven't done it yet, you still have about a month to go and get your comments and make your comments. We do promise to look at every single comment. As always, you know, we will have some people who really like certain parts of the Omni CBR. We might have other people who will have a particular concern with some of the same questions, and they may raise objections or alternative suggestions. And we will do our best to find the most practical way to resolve those comments when we then collate and respond to your comments. So this year is your chance to really react to the content, the proposed content. And that is what the purpose of this workshop is all about as well. Juanita, could I ask, is there anything that you would like to raise as an intro that you think people should bear in mind?
Morning, everyone. So I'm Juanita Smit, and although I'm in the Conduct of Business Supervision division looking after the conduct of insurers, I've also been very involved in the Omni CBR project. Charene, I think you actually touched on everything that I would say. I think we just need to keep in mind when we now get questions and comments in the session, and this is also why it's the longest session, is we're going to look at the sheets. So there's the all sheets for those who haven't seen the webinar, which is the basis of questions that we're asking across the industry. And this we need so that we are able to do benchmarking, so that we're able to see the entire customer journey, that we can see the actual cost for a product from beginning to end for that customer, that we can also see red flags. We must remember with offsite monitoring tool, it's not there to tell you the entire story. It's not the only thing we're going to use for supervision. It's just part of the supervisory framework. So it's really just flags that we will then use if you're an outlier. So we're using the information that comes into a separate database. You'll be able to submit in one of 2 ways, so that we cater for bigger organizations and small organizations. So you can either submit it through XML codes, which is a more automatic way of submission. It's also a little bit more sophisticated, so it might be that only bigger entities are able to do that. Although my understanding from the experts in this field that worked with us on the Omni CBR is that this is a very sophisticated field due to the nature of the work that you're doing. So most of you might actually submit through the XML codes. Otherwise, you'll be able to submit web-based. There's no physical returns anymore or the uploading of returns. So web-based is you'll go onto the portal, you'll complete the return, you can go in and out and in and out. You can give more than one person access to complete it, and then submit it once it's done. So in the phasing period, after we've now worked on the actual content, which we're doing now, and that's what I keep on interrupting myself. What I wanted to say is we're going to look at these all sheets that apply to everyone that needs to complete it. And we know it's a lot for the industry. You haven't done a conduct of business return before. The idea is that this replaces other returns that you're doing. Even in the CIS world, the information that you're currently giving to Morningstar and the information that's being submitted there, we want to bring it in-house so that we can do better analysis, be more predictive, be more proactive with our analysis. Like Chwayita indicated, this is part of our strategy of becoming a stronger regulator and trying to be doing more predictive analysis, also trying to give more guidance to the industry, trying to make sure that inclusion is part of the industry. So that is the basic question. So you can understand it was quite difficult to get questions that we can ask across the entire industry. There will be questions that won't be applicable to you. And for that, you can just put in a 0 and it's okay. And we know that you considered it, whether you're doing an XML submission or a web-based submission. And then there's the specific sheets, and those are especially ones we want to focus on in this session that talks to the CIS and hedge funds and talks to the asset managers. And you'll see with the asset managers, there's an additional annexure that you need to complete. So except for the general questions that we're asking across the industry, if you're an asset manager and you customize the sheet that way, you'll get your business composition additional sheet for asset managers and you'll get an annexure for asset managers to complete. And CIS and hedge funds, you'll have your business composition additional sheet that is, and it's more focused on the risks that we've identified in your industry. That we've picked up through engagements with you, that we've seen over the years, that we've seen out of complaints, that we've seen out of trends, that we want to monitor. And then for each portfolio, and that's why that question is important on the company information sheet about how many portfolios you have, we have an additional sheet for each portfolio that you need to complete. We didn't want to send out the return with all the possible tabs. It would have been more than 100 tabs and it would have been very overwhelming and very confusing. And that's why, and this is just some of the questions that we got out of previous workshops. When you open the Omni CBR, you'll only see the 4 sheets, but you actually have to go onto the company information sheet, say which sector you are for which clients, and then customize it to be able to see what your return looks like and what you need to comment on. And currently it's just contents. We know that you can't complete any of the cells. The return is locked. We know that the formatting on the cells that you can complete, like on the company information sheet for customization, is not all in the right format. That is things that we'll focus on in the second round when we talk about technically now. How long does this implementation take? Technically, does the return work? Is there cells that are coded wrong, that's formatted wrong, that type of thing. And you'll also see a lot of the information we're asking on the company information sheet is information that we should be having and that you should be reporting to us. It doesn't always happen, so it's a risk that we've seen, and that's why we want to up. So that's why we're asking that information on a quarterly basis, sure that we have that updated information. And we're trying to take the burden eventually off from the industry about having to complete a lot of information requests all the time or having to do data cleanups, because we do need accurate and complete data on our side. And like we said, it's a very gradual rollout. And the reason is also on our side. We need to really do a lot of system work on our side, a lot of resources that we need to get on our side so that we're able to deal with the data, analyze the data, and eventually also give feedback into industry, which we think is very important. And this will also inform if there's any need for changes in legislation in the future, and then we have the data to work from it. So it's very clear, it's very accurate, it's measurable, and that will then also inform some of our decisions going forward, and it'll be a better base to work from, and we'll be better to identify those risks. Thank you.
Thank you, Juanita. We've received 2 questions, and the first question is from Jenny. Good morning. And she asked whether the CIS Omni CBR submission should be completed by the CIS Manco or the investment manager of the CIS. We have our colleague Nayo on the line. Nayo, could I perhaps ask you if you can respond to this question? Nayo, just see if your microphone is enabled, please. Brent can respond. Akarshan, could you please unmute Brent?
Hi, thanks, Charene.
Thanks, Brent. Please go ahead.
Thank you. So a very good question. The Omni CBR in this instance will be completed by the collective investment schemes manager, and the manager will be expected to complete the return for their entity and all of their portfolios, obviously. So we are not expecting the investment manager or the, put otherwise, the phase Cat 2 asset managers to complete it for their portfolios that they might have delegated functions for. So the CIS manager will be responsible for completing the return.
Thanks, Brent. I wonder if you could perhaps respond to the next question as well. And the question is, sorry, let me just go up. Great to see people participating. Nombulele is asking whether the Morningstar reporting that Juanita touched on is going to fall away once the Omni CBR is promulgated.
Hi, thanks for the question as well. So in the long run, yes, but not right now, not until we have everything sorted out. So that's at the end of all of it. And I think the annexure that we have attached is to allow us to also get portfolio level information in the long run. But as you mentioned earlier, Charene, it's part of the overall CBR project, and it's not something that's immediately going to be made away with.
Thank you very much, Brent. I see Chwayita also has her hand up. Chwayita, please go ahead.
Yes, I wanted to respond to that particular question regarding Morningstar, but Brent already did. The intention, yes, eventually in future, once we have fully implemented the Omni CBR, is to, as Juanita indicated, have all the data requirements that are collected from the industry in-house. So yes, eventually in future, but not at the moment. We will probably, even after the CBR process has been fully implemented, try to run a parallel reporting just to see where the gaps are. But yes, definitely, eventually, we will be required as FSCA to collect all our data directly from the industry. Thanks.
Thanks, Chwayita. Martha, Akarshan, can you unmute Martha as well, please? Thanks, Martha. You can go ahead. Martha, just try and click on the mic.
Oh, yes, sorry. I wanted to add on Brent's answer on the question of whether the CIS manager or the investment manager of the CIS is supposed to submit the CBR. I want to add that in most cases, if not all, the investment manager is also an authorized FSP. So the FSP itself will be required to submit the CBR on its own as an authorized FSP. So in both instances, the CIS and the FSP itself will be required to submit the Omni CBR respectively.
Thanks, Martha. And while you are on the line, could I perhaps ask whether you can respond to the question from Renee, who's asking whether this will also replace the submissions to the other regulators, such as the SARB returns?
Okay, regarding the sub returns, all the returns that are submitted to the Reserve Bank will stay as is. So all the regulatory submission to the South African Reserve Bank will stay as such, and then all the requirements of submission to the FSCA will stay as such. So in this instance, regarding the Omni CBR, it will be done to the FSCA only. So all the returns to this Reserve Bank stay as is. So the entities will be required to meet the Reserve Bank requirements and also the FSCA requirements individually.
Thank you, Martha. And as Brent has also alluded, eventually some of the returns will fall away, but it's part of the phased-in process. So it's going to happen over a period of time, but that's FSCA based only. It doesn't affect the returns to the SARB or the Prudential Authority. We have another question from Nombulelo, who's asking what unregulated funds entails. Will it include alternative investments and private equity funds? So if I could ask Brent or any of the colleagues to please respond. Thanks, Brent.
Thanks, Charene. At this point in time, we don't regulate, and I'm going to be looking at specifically private equity funds. We don't regulate it under CISCA, so we aren't including that at this point in time. If it changes in future, that could be some additional development, but at this point, what we are looking at is purely just the collective investment schemes and hedge funds portfolios.
Thanks, Brent. And maybe if I could ask you to respond to the next question as well, which is from Jenna Lee, and she's asking which assets under management are referring to in the asset manager sheet. Is it CISs only, or does it include segregated model portfolios too? Reference is being made to registered and unregistered funds, which is only applicable to CISs.
Good question as well. The collective investment schemes sheets, and when I say that, I mean CIS and the HF or hedge funds sheets are purely hedge funds and collective investment schemes. When you look at asset management, you are looking at, as Martha indicated, the phase cat 2 information. So that's where the asset managers themselves will be putting in their segregated mandates.
Thank you. Then we have a question whether it will not be duplication of information since they are submitting assets under management to both the SARB and the FSCA quarterly going forward.
Charene, so perhaps at some point in the not too distant future, we could look at alignment, but at this point in time, the SARB or the Prudential Authority and the FSCA, we do have two separate requirements, and for those requirements, we are asking for two separate returns. And in our instance, as the FSCA, we are looking to align all our internal requirements into one report, and that's what we're discussing here now. The fact that we may very well, our sister regulator might be asking for the same information. I suspect at some point we might look at that, and there could be a slight duplication, but unfortunately that isn't being dealt with at this point in time with the Omni CBR project.
Thank you very much, Brent. And I see we have a couple of questions that all have to do with duplication and double counting. Juanita, I see you've got your hand up. Would you like to just come in here as well?
Thanks, Charene. So I think it's important to note that when you look at the return and you look at what you're submitting to SARB currently, there might be some indicators where we're asking the same question, But, and I mean, you can't remove prudential indicators from market conduct indicators. It doesn't, it's not completely two different worlds. So some prudential indicators will also be a market conduct indicator. Why we believe that we did look at duplication when we actually did the return is we're not asking it at the same level or in the same breakdown, because we come from a market conduct perspective and we come from our mandate of trying to pick up the market conduct risks and the trends and trying to see the vulnerability of customers and where those risks are. In the prudential returns or in the returns that you submit to the SARB, it's purely prudential indicators that they're using and they're asking it at a higher level. They won't, for instance, do a market segmentation breakdown in the information or ask the fees like you'll see on the all sheets. We actually ask you what type of fees it is that you're collecting, what type of fees it is that you're paying, who's collecting it for you. So although you might be saying a total amount for fees on those type of returns, this is not what we're asking you here only. We're actually asking it at a different, totally different level. We're asking it on portfolios. We're asking it down on customer segmentation. And that's why, and this is something that came up in the other workshops too. If you initially look at it, it feels like there's going to be some duplication, but there's not. There's also not going to be double counting because we're not taking our returns and working directly off from the SARB returns and doing one or other correlation there, because we do realize, although we're working in calendar quarters, that is what we're aiming for, and that you'll be submitting at the end of the month after the calendar quarter. And there is some information that will then correlate, because that would only be the total numbers, which we auto-calculate for you on this return, so you don't have to put it in double. What we're asking is at a different level, and we need that from a market conduct perspective. So if there's going to be comments about duplication, please look at which level we're asking it versus the level that you're answering it. If you then believe it's at the same level because it's looking at the same risk, then you can highlight that to us. But at this stage, we believe that we actually asked it at the level that we needed for a market conduct perspective.
Thanks, Juanita. I think that has dealt with all the duplication questions, but if you still have a question, please feel free to ask that. I'm going to move to the last question that I have in the chat box at this stage then. Juanita, we have a limitation with this kind of workshop. We are unable to share a screen with you. So we can't share the questions with you, but Juanita does have the questions in front of her. So if you could look at the asset manager sheet for us, Juanita, there is a question where the question 1.2 in the asset manager sheet should be marked as 0, not applicable for the assets under management related. Sorry, there was just a pop-up that distracted me there for a second. For the assets under management related to segregated model portfolios.
Sorry, Charene, as all good things, it hangs when you have to customize. So I just want to look at the question. Is it a question from Billy that we're talking about? No, this is about a co-branding.
It's from Jenny Lee.
Okay, I just want to see if I customized it quite right. Jenny Lee, I remember you from the other workshops as well. Welcome. So you're saying which assets, like I said, we already dealt with which assets is under management when we refer. Oh, Brent answered for the CIS side and you're asking on the asset manager side. I think Zulani might be the best person to answer that. Whether it's the segmented model portfolios too or not, and you're referring to a specific question. So when I look at the asset manager business composition additional sheet, and we're asking you about all funds under management at the end of the reporting period, and then we ask you to take out the unregistered or unregulated funds, and then we ask you about the total of those unregulated funds so that we can take it out of the all funds. So in the all funds, or in 1.1, it would include everything. And then only do we split it down. And then you'll see in 1.4, when we talk about the total assets under management, We then take it into the different funds, about pension funds, CISs, long-term insurers, short-term insurers. So we actually have a few questions. You shouldn't just look at the one question, but on the first question, it is the total for all funds. And that kind of links up to the point that I was making. That's maybe what you would include in a SARP return. But we then take it down and we actually ask you to take away the unregistered or unregulated funds and the value of that.